The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Glad to be on back here with you at TFNN.com. Don't forget you can listen to us on your mobile phone at TFNN.mobile. And let's check out where the markets are at right now. We got the S&P is down 4 points. We have the Russell down 5.8. NASDAQ is currently down 1.5, and the Dow is down 62. Copper is currently down 1.5%. Copper moving pretty big right there. We got gold right now up $1.90. We got silver. It's in the negative territory right now, down about 0.5%. And looking over at natural gas, it is down, up, down, up, down. It's basically flat. It's nothing. So natural gas isn't doing anything. We got oil right now. It is down $1.35, over 1% move right there. We got corn down big on the wage report, so down 12 points right now. We got soybeans also down big on the report, down 34.50. So production's looking good. Crop prices dropping. Food gets cheaper. We got euro dollar. We'll see if that's how it all comes out. But that's the initial release so far. We'll get on over at euro dollar. We got the euro dollar is currently flat on the day. We got the Aussie dollar is down 42 pips. The pound dollar is down 70. Dollar franc is currently up 2 pips. Dollar CAD up 12. U.S. yen is down just a couple pips. Aussie yen down 45. Euro yen up 4. Pound yen down 88, and euro pound up 42 pips on the day. All right, well, that's a lot. That's a mouthful. It's got us caught up on everything that's going across the board. Not a lot of news impacts besides, like I said, the major thing being the ag reports happening today, and something that you better be aware of every time that's coming up. Just because if you are an ag trader, then yeah, that can sort of knock it out of you. Let me go over. We'll pull some information up on it and go into that crop report. And let's see here. See what we can get on these. And one more, and then I'll move it up to the screen here. It's over on the USDA's website. Okay. So right here, over on USDA.gov, and they release what all the release dates are. So you know them all for the year in advance right there. Okay. And but it's OCE commodity, and then so USDA.gov/OCE, which is the Office of Chief Economist, /commodity /WASDE. And again, all the dates, all the information is right there. And you can get all the reports, the latest report available right here. You can also get the historical information. And you can subscribe to it. You can find out how the information is prepared. You can put all that stuff together. But right here you can see it came out today, March 10th. And they go into wheat, they go into grains. You got rice, and you got your oil seeds, your sugar, livestock, poultry. So obviously that's something you want to be looking at as well for the meat and poultry. So if you're trading, live cattle, basically if you're trading cattle or hogs, you want to be, paying attention to that as well. And cotton. So really any one of these, the main one being the grains if you're doing, corn and soybeans. So you can go through and you can look at all the different reports by detail, by market, and get the information you need. And I recommend if you haven't done this before, maybe go back and look over it and see the impact on the market and see what the report was and what the, how all the numbers came out and how that did it, and look at some of the reviews. Just pull up news and put the date of when the reports came out in the past, and just so you can sort of know what to expect. How does this market move whenever this report usually is released? And if you can get that information down, then that'll help you out quite a bit, just knowing what to expect. Again, that's if you're trading those markets. I mean, if you're not trading, soybeans and cotton and corn and lean hogs and live cattle and feeder cattle and, all, cotton and sugar and everything else. If you're not touching any of that, most really not going to have much of an impact on you. unless you're trading maybe a stock that is highly impacted by that. So, there could be stocks that could be correlated based upon the, they have expenses in that business. So, if all of a sudden if hogs are going to be flying up in cost because of lack of supply due to having certain viruses that killed off a whole lot of them, and therefore there's going to be very little coming out, then that's going to could raise the cost for like Owens or or for McDonald's making sausage patties or whatever. So there can be different levels of impacts on different things, and it's sort of interesting to see how it's all tied together. But at the very least, the simple thing is if you're trading corn or soybeans, or if you're trading corn and soybeans or any of those other markets, but if you're trading on Nadex, corn and soybeans, and that's obviously one thing you're going to want to be very, very aware of. And we can look at the corn and soybeans contracts here. I'll pull them up for you. And one second, I'll throw the chart up. Right here. All right. So, go ahead and pull this up. And we can, so we see the report right here. It came out at 12 o'clock and got the move from 465, 485 down to about 475, almost down there. It's like about 475.50. It's about a 10-point drop, pretty quick, over in the ag market. That's not just a massive move for ags, but it definitely is. I mean, it's a nice downtrend. And, and if you were thinking you were in an uptrend, hopefully you got a clue right here when it came, market started pulling back down. But it made it very clear right there at the noon hour. Dropped down, popped back, and then just kept going in the same direction. We go over and look at soybeans. And soybeans, I mean, it was a hardcore drop right there. Look at that. So, I mean, just bam. So it stopped anybody out that wasn't already short. And even, had a little volatility there. Just just popped right there and then pulled back up and then went right back in the same direction. So, you can start, if you look at this, if you'll go look at like continuous contracts, and you have to have something that gives you more data, like a Ninja Trader, something like that, that'll give you more historical intraday data. So I love Thinkorswim. I use it for a lot of things. But if I want to look at 5-minute charts from a year ago, unless they've added a feature maybe I don't know about, I can't do that right now. And so, you may want to check out, maybe a continuous platform that may give you, it's like they give you 20 days of historical, which is fine, which is great for a lot of stuff. But if I wanted to look at like a year cycle of intraday movement so I can find just those specific reports, then that might be a little bit of an edge of using, various platforms for that. And we can see over here, the dates you'd want to look at for 2014. Obviously, we had January and February already. Okay, now January was combined with the annual production, and that's a massive. Like when that January trade happens, along with WSD at the same time, it is a massive move. So I wouldn't even put that in the same league as all the others, but it's. I mean, a lot of it can be a limit move day. But you can go back and look at that. You can also look at historical information and find all the stuff. You can find all the revisions and the changes they've made. But just find the past reports and go back and look at the dates. And once you put all that stuff together, like I said, you got a really, really cool news trading plan for just corn. And as you can see, the report comes out every single month. So it's a monthly trade you can do. And it might be a straddle, it might be an iron condor, or it might be something as simple, okay, as sitting back for a minute, letting the thing move, let it pull back. You get a nice 50%, pullback on that. We go over here, a little retracement in, and what do we got? Let's see. Right about there. Okay. We pulled back to about the 50, really pulled back to the 63.8% Fibonacci level, right on that. Bounced right off of it. So, got that pullback. I mean, I would have probably been looking to get in on that pullback as soon as it broke a low right about there. Would have got in a little bit early probably. And then went up and then pulled on down. So that's one way to play it. Another way is you could look at, deviation levels. We post those every day. Looking on over at, like, say, the soybean market. And if I go in and price the deviation, sometimes you can use these also as just, having confluence, having several things work together at the same time for you. And let's see what we got. So on soybeans, working at 14.59. So we're pretty high up here. We're starting to move down. Let's go down a little bit lower to 1440.9. So that was like our, right there, that was our one deviation move. So it was already heading down. And then, let's see, let's go a little bit lower. So that was the, I want to make sure, yep, that's the one. So 1431.8. So right here. Okay, so that was our 1.5 deviation level. And then our 2 deviation level on soybeans is going to take us down to 1422.8. So right there, 1422.8. By the way, look at that move. It's already past the 1. It breaks right through. It stops right at the 2. Pulls back up, pulls back down. We also are right at, fib levels. But sitting right there, basically at the 2. If it was going to make a 3-dev move today, which it might, it's pushing. And it still got some volume on this down move. So it might still keep going. If it does, the next target would actually be, it seems a bit nuts, but actually could be down all the way to 1404.6. So right down here would be, if it decides to keep going, then 1404.6 would be the next breaking point. If it doesn't, it could easily pop back up there to like a -1 deviation. So, you have a straddle right there, and it made us flatten out for the rest of the day. That's why one of the things I teach is go back and look at, the historical times that the release has come out, and that makes your life a lot easier as a trader when you're trading these news releases, or even if you're not trading the news release, just to know what to expect. And what you're going to find out, if you'll go back and study them, you'll want to trade them. Because you can trade him in either direction. I traded NFP last Friday, and there were some straddles available on USD CAD. It was too expensive on Euro Dollar, and I did iron condors, and they're not hard. It takes a little getting used to, so you just hop in. You can do the iron condor every hour. It doesn't mean it's going to work, but just to learn the math and practice it out. And if you check out the radio archive from, on the 3rd or 5th, 3rd, 4th, or 5th, over there on Tiger TV, you'll be able to find it. But I went into detail how an iron condor works using Nadex spreads, okay, and putting those pieces together. And, it's amazingly simple how much easier it is than most people think it is to do the iron condors. And they're becoming one of my favorite strategies. So it was one that I was starting to play with, and now, every time I see that premium is too expensive for a good straddle, I'm immediately doing the math to see if it's better to go the opposite direction of the straddle as to an iron condor. All right, stay there. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoades, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And, all right, so like I said, just going through the ag reports, getting those knocked out. Let's go ahead and look at what else we got coming up on the week. That is news you can use. And let's see, what do we got tonight going on? We're going to have a monetary policy statement coming out of the yen. Not going to be a tradable event, be an aware event. Like an event you need to be aware of. And as far as time, they say tentative, but see if we get a little better than tentative. Let's see, 11:28, 11:20, 10:58, 11:15, 12:14. So basically about 10:50 to about 12:30. It looks like over the last 6 months is when that report has come out. So you need to be aware of that between that time. Okay. And let's see here. So that's that report. We also have the NASB confidence report coming out of Australia. And let's see if we can possibly... So the NAB confidence report. So, and I want to see if there's anything on that that we might be able to use. But you can see soybeans heading on down. Looks like it's going for that 1404 level. We'll see here. Still pushing with pretty high volume. And... all right. Okay, let's see. I'm trying to see if there's any like usable information on this at all. All right. So we got the NAB confidence report, and it says high rating, but I'm not seeing a consistently high impact on the report when it comes out. We'll go through multiple charts real quick. Just trying to scroll through this pretty fast. And there's different ways you can do this. You can spot check it with like the Olsen scale, which will show you sort of like the earthquake felt in all FX. Like here's an example right here. And like, how impacted was every FX pair by this report, and which one was impacted most by the report. And so the Aussie was impacted, but the Aussie CAD was impacted the most, So it gives you an idea maybe of what might be the currency pairs to look at when a report comes out if you're trying to straddle, or sometimes you're even doing different. Maybe you're trying to go in and do an iron condor or whatever, what maybe have the least impact. And it looks like the Aussie CAD actually does have one of the biggest impacts. If you do check out one of the archives from last week, I went in and I taught how to actually make your own FX pair, like 21 different possibilities when using Nadex. So you could trade things like Aussie CAD, Euro CAD, Euro, Franc, whatever. Like there's all different combinations you can trade. And I talked about how to combine the spreads together to be able to pull that off. Let's see here. But yeah, it looks like we're not having any kind of major high impact news that we're going to be able to use really tonight or probably even tomorrow. There's some inflation report hearings and manufacturing productions coming out of the pound at 5:30 tomorrow. We got the JOLTS job openings coming out of the U.S., usually also not a massive mover. So those probably be staying away from. New Zealand does have their interest rate on Wednesday, so be aware of that. But not necessarily something that we're going to be focusing on. Australia has its employment change number, and going to be a pretty light news week. That's what it looks like. Decent move. 75% of the time breaks 50 pips. Average range is 50, which means it has a lot of small and a lot of big moves. We'll have to look at that one in more detail as the week progresses. I'll go into it chart by chart. We'll see if we actually have a tradable event. Because I pull the quick numbers I pull are how often does it break 50 pips high to low, and what's the average move high to low. And then I go back and I look at where is that high to low, when does that line up with what expirations, and what about the open to the high, the open to the low, so that we can see what's the actual move I should be looking for. We also got U.S. core retail sales, and about the only currency pair that might be tradable on, and again I'm going to review this with you later in the week, is the euro dollar. About 70% of the time it breaks 50 pips, and it looks like here the average move is about 60. So it's the only one that actually has that great of a combination. But you go down and you flip it around, and if we have some high, implied volatility, which I wouldn't expect us to, but if we do have a lot of IV on that report, you could actually look at doing an iron condor on the U.S. yen. Or the Aussie dollar. They have the smallest moves. U.S. CAD as well. So all three of those having smaller moves. I'll give you the details on that when we get back. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Techni Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techni Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Techni Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. So, like I said, just going through a few things for you right there and looking at the Olsen scale and talking about that, but also, looks like this soybeans might pull on back before the end of the day. We'll see here. That's a big move already, so, But anyway, so on the report at the end of the week, we talked about Aussie. I was also going into the U.S. core retail sales in the last segment there. And let's see here. Looks like Aussie dollar on the core retail sales about 45% of the time moves 50 pips. Average move 40 pips. Dollar CAD 20% of the time moves 50 pips, but average move is 54. So when it moves less often, but it has a little bigger move when it does move. The U.S. yen only breaks at 16, only breaks 50 pips 16% of the time with an average move of 49. So those would be three very iron condorable trading instruments on the core retail sales that's going to be coming out, on the 13th. And let's see here. I'll pull that up. Right there. And core retail sales. Yep, so 8:30 a.m. That would be the trade to look at as well. And that's really what we got. So it's just a light news week. Enjoy it. Enjoy when the news is here and take advantage of it. And when the news is gone, then just enjoy the lack of it and smoother charts without random news flying out of the market. So that can help as well. And just enjoy those regular ranges and all that stuff going on. But anyways, so I'm trying to go through and see anything else I can see, but that's really going to be our biggest overall impacts that we can take advantage of. Now, one thing I can do is maybe do a quick review. On the review here. And let's see. If I pull up, and I'm going to open up the Nadex trades here, and let me find my calculator. So I can basically show you how this works, or maybe I'll just make one real quick to show you how it works. It's pretty simple. But I want to go through the Iron Condor on Euro Dollar that I did on NFP. And it's pretty common. It's what I'm doing on most of them now. Most of these big reports, the premium's so high that it really is just, it's great. So I don't have to worry about, high premium. High premium is not a bad thing. It's just you need to make sure you're on the right side of the trade to capture the premium. And there we go. Okay. So I know I've programmed this in a couple times. I just haven't completely wrapped it all up yet. And I'm almost ready to get this whole thing up online too. Okay, so if we go in here and if I pull up the different positions where I bought the Euro Dollar and I sold the Euro Dollar, then what I'll find on the strategies, it actually came out to be a really good risk-reward trade. And I want to, sorry it's taking so long, but I want to get the exact order tickets for you. So I'm not just making up prices, but telling you real ones here. Okay, order for buy and sell executed March 7th. There we go. That's the one I want. Okay. So I bought the lower one for 1.3876. And that was a, see if I put them all on here. You know what, I need to make a new little calculator for this to make it really simple. All right. So we're going to put the buy. Down here, I'll just put the sell. Now we can bring them together. And I'll zoom in a little bit to make it a little easier for you to see. Because I think this is one of the most misunderstood strategies. People, especially when they get into just news trading in general, and they miss out on this, and they think that they're getting, hosed. And it's like, well, actually, you're just, if you think you're getting hosed, you're on the wrong side. Just get to the other side. So you don't have to be the guy paying the premium. All right, so I bought the 1.3910, and that was the ceiling 1.3810. So we'll put ceiling, and we'll go down here. We'll put floor. And then I bought it for 1.3876. Okay. And now that we got that, now let's go get the one that I sold. And order executed to sell. There we go. Okay, so I sold the 1.4010 to 1.3910. I sold it for 1.3932. So, ceiling, floor, price. Again, it's a little bit different, so we're going to switch these around. We're going to put the buy down here and the sell up here, okay? So, if I did that, and again, this is always going to look nuts when you first do it until you fully understand the strategy. So if I go in and I sold that, then my risk on the trade, if I sold, is going to be the price to the ceiling, because it's going up. My profit's going to be the price to the floor. So go here and go max profit, max risk. So the way I calculate max profit is the price I sold down to the floor, because it goes down. I can't make any more money below the floor. The max risk, I'm going to go over here, And I'm going to take the ceiling minus the price I sold, so 78. Okay? And then we'll do the same thing, except we're going to have to do it a little bit different. We're going to do max profit, because you make money when it goes up, and max risk. So max profit I can make on this is the ceiling minus the price I bought. Max I can lose on this is the price I bought minus the floor. I got to do that backward. Floor minus the price I bought. Yeah, same thing here. 2 equals B5 minus B3. Okay. So that's the, single side max risk, max profit. All right, so combined max risk and combined max profit. Now, understand the floor of this box right here, the ceiling of this one, notice how they're the same. Right? So they're the exact same. The market can't both expire above 1.3910 and below 3.910 at the exact same time. Okay? I have the 10 a.m. expiration here. And I did a whole lot of these. This is just one. Meaning like I did multiple contracts, multiple pairs. But so 10 a.m. expiration. The market can't be both above and below 1.3910. So I'm not going, in no case will I ever have max risk on both sides. Actually, in no case would I ever have achieved risk on both sides. Meaning, if one side is hitting max risk, the other side is at max profit. Because the way I make the way I suffer max risk would have to be on the other side of 1.3910. So if I sold this and it went down, I'm going to get max profit. If I sold this at 1.3932 and the euro dollar is below 1.3910, I'm getting max profit. I might get max risk on this depending on how far it goes down, but there's no way I'm going to get max risk on both or even risk on both sides. I may get risk on one or the other. Now I got straddle where you could lose on both sides. In this case, one side is going to lose or the other side is going to lose or both sides are going to profit. Okay, so your premium collecting, the odds are in your favor. Okay? And so we'll go in and let's say, okay, well, what is the max profit? My max profit is going to be the profit on one side plus the profit on the other. Now, to get that max profit, the market would have to finish literally right at 1.3910. Okay? So market expires at 1.3910. Now, one thing I want you to notice is the width of the spreads. So this minus that right there, they are 100 pips. And I'll go and I'll put a little formatting in there. Make it 4 digits. Okay? They're 100 pips wide. And we'll do that down here. Well, if the most I can make is $56, okay, that's pretty good. So let's so we got max profit that's right at the center. Now let's do max risk up, and we'll do so max risk above. We'll say if it went all the way above the ceiling, okay, 1.0410. Max risk below 1.3810. And these are all combined. Well, if it went above 1.0410, then on my sold contract I would lose all $78. But on my bought contract I would make all $34. So I would lose $44. If it went all the way down, remember, that's on a $56 potential risk. If it went all the way down below 1.3810, I would lose $66 on my bought, and I would make $22 on my sold. So just to show you the math, it's going to come out to the difference between 100 and 56, but I wanted you to see it. So it's 44 pips. So my worst case scenario on this trade is I lose $44. My best case scenario on this trade is I make $56. Now again, to have max loss, it is going to have to expire above 1.0410 or below 1.3810. But every tick it is beyond break even, so this is where you actually start understanding the math. Once you got that, you're like, oh yeah, that's actually a good risk reward scenario. Okay, so you got one last piece you really want to get down. Okay, so moves up, and we'll say moves down. So at what point are you not making any money? Where do you start making and starting losing money? At what price? Okay, so if it moves up, then my buy can make 34 pips, right? Which could cover a $34 loss on my sold contract. Would lose $34, 34 pips on my sold contract, then basically that means the market can move up 34 pips higher than where I sold it. So I simply go over here and I go, my break even on my move up is my max pip profit on my buy side plus my price I sold the other one at. So it could go up to 1.3966 and I will be break even. Okay, so this is literally a move up break even price level. If it moves down, then my sold one will make max profit right here. And it will cover up to, since that's $22, it'll cover up to $22 loss on the one I bought, which means the price I bought this one right here at could drop by 22 pips and at least have $22 in profit to cover the first 22 pips in loss on the bought side. So, yeah, let me redo that. We'll go over here, do minus. There we go. So down to 1.3854. So my, you could say my break-even range, pretty wide, is 112 pips. Meaning I have 112 pip high to low the market can move, and I'll be break-even. So that's not bad. Every tick above 1.3966, I will lose $1, up to 44 bucks. Okay, so notice if I add that right there plus 0.0044, I get 1.0401, which is the ceiling. Okay, so I'll lose $1 every tick above 1.3966 that the market expires. I'll lose $1 up to $44. I'll lose $1 every tick below 1.3854 that the market expires, up to $44 in loss per contract. I could do 1, 10, 100, whatever. I'll make $1 every tick higher that the market moves up above 1.3854. So I'll make $1. I'll make $1 for every tick lower the market is below 1.3966. We'll talk about where that max profit is and put it all together right when we get back from this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. DirectionShares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the DirectionShares carefully before investing. The prospectus and summary prospectus contain this and other information about DirectionShares. To obtain a prospectus or summary prospectus, please contact DirectionShares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhoades, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhoades Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right. So, anyways, we're going to get over this Iron Condor in detail for you step by step. And basically what I'm showing you here is we went in and I did this Iron Condor on the non-farm payroll event. I did it because I saw that the premium was really too expensive to be a great trade, to do a straddle, but it was great for an Iron Condor. And I could do an actual Iron Condor for 112 pip break even range. So I was very comfortable with that. Went in, looked at the sell side. I could sell the 40.10 to 39.10 spread, the upper spread, for a price of $39.32. That gave me a max profit of $22 and a max risk of $78 on that side of the spread. But then I went in and I combined it with a buy spread below it. I bought the 39.10 to 38.10 at a 38.76. That side had a $34 max profit, a $66 risk. But again, it can't expire both above and below 39.10 at the same time. Therefore, I get to combine the risk and the rewards together. The net result is that made it where the long side would cover the short side all the way up to 39.66, and the short side would cover the long side with its profits all the way down to 38.54. If it went above 39.66, I would lose $1 for every tick for every contract there that I have, up to $44. If it went below it, I would lose $1, lose a tick for every tick below it, up to a maximum of a $44 loss per contract. Every tick above 38.54 and every tick below 39.66, I'd make $1 up to a max of 59.66 if it expired right at 1.3910. So it'd have to expire literally like right on the price that we're looking for there. But if it did expire at 1.3910, and we got pretty close, then, you have a max profit on the trade. So on this particular trade, let's see, I can tell you what it was. Let's see, euro dollar settled at, let's see, what do we have here? 38.71, if that's the right one. So 38.71. So basically what it is, on the one we bought, we had like a $5 loss, and we got max profit on the one we sold. So we made, about $17 on the trade. It wasn't massive, but and it's one of those things where you're not expecting to get max loss by it expiring all the way above 1.0410, or get max loss by expiring between 1.3810. You're also not expecting, which you'd be surprised how many times you get close to it, max profit by expiring right at, right at, right at the exact strike. So, because remember, if I put up $66 in risk, I got, and I only lost $5, I got $61 back on the trade, right? So I got 61 back on that. I got 22 back. I got actually all 100 back on the other side because I got my risk and the full profit. But this is a trade where instead of having to do a binary butterfly where it has to expire, and if it expires on one ticket, one side or the other, on one side, then I made full profit. On the other side, well, the bummer about that one is I lost. I didn't make the full profit. It was on one side, but I also didn't lose this massive loss on the other side. So that's where it really is, to me, in a lot of ways, superior to the binary butterfly. Even though your reward's lower, your risk is significantly lower. And you get a massively wide range. You can hold on to the thing. You can let it fly around and come back down and relax and get a great risk reward without having to be an all or nothing. So really, like I said, become one of my favorite neutral trading strategies, especially news trading strategies, when that IV is particularly higher than normal. And net result, like I said, profitable on the trade. But hopefully that made a little sense to you. You might have to watch the archive one or two more times. But it's definitely worth learning how to do this. It'll help you out a lot, knowing when not to do a straddle, and when you don't have to set aside, when you still can take advantage of the market despite what the premium is. All right, we'll be back right after this with another great show coming up for you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.